Hi, welcome to Market Watch. Today, we'll talk about the CPI report and the stock market. The CPI report measures inflation, which is the rise in the cost of living. Inflation affects money, consumers, and businesses. It also influences the Fed, which can change interest rates to control inflation and support growth. The CPI report for October 2023 showed that inflation slowed more than expected. Consumer prices were flat from the previous month, but increased 3.2% from a year ago. Both figures were below the estimates of analysts, who expected 0.1% and 3.3%, respectively. The core CPI, which excludes food and energy, also rose less than expected, by 0.2% month-over-month and 4.0% year-over-year. The main reasons for the slowdown in inflation were falling energy prices, which dropped 0.5% in October, and moderating prices for used cars and trucks, which declined 0.8% after surging in previous months. The stock market reacted positively to the CPI report. The Dow Jones gained 0.4%, the S&P 500 rose 0.65%, and the Nasdaq climbed 0.9%. Investors may have been relieved that the inflation rate did not rise even more, as some had feared, and that the Fed may not need to tighten policy as aggressively as previously anticipated. However, some analysts warned that the inflation slowdown may be temporary and that price pressures remain under the surface. They pointed out that some categories of goods and services, such as shelter, food, medical care, and transportation, continued to show strong increases in October. They also noted that supply chain disruptions, labor shortages, and rising demand could keep inflation elevated in the coming months. Moreover, they argued that the Fed may still raise interest rates sooner than expected, given the robust growth and the recent tapering of its bond buying program. Therefore, the stock market reaction to the CPI report may reflect a mix of optimism and uncertainty about the inflation outlook and the Fed's policy response. Some investors may see the report as a sign that inflation is peaking and that the economy is adjusting to the post-pandemic environment. Others may view the report as a temporary reprieve and remain wary of the potential risks of higher inflation and interest rates. The market may also be influenced by other factors, such as earnings, events, and the spread of new variants of the virus. That's all for today's episode of Market Watch. Thank you for watching and subscribe to our channel for more updates. See you next time.